Well, we start the hour in the UK, which has had its credit rating outlook downgraded to negative by the ratings agency Moody's. The financial assessment came after the UK voted to leave the EU in an historic referendum on Thursday. Moody said the results would herald a prolonged period of uncertainty. Meanwhile, Prime Minister David Cameron is under pressure to speed up the so-called divorce talks with the EU after Brussels said exit negotiations should start immediately. EU Commission President Jean-Claude Juncker has said he would like to get started on the terms of their departure as soon as possible. US President Barack Obama has since assured Cameron that the UK will remain an indispensable partner. Well, of course, the Brexit vote revealed a sharp split in opinion across the country. The UK as a whole voted by 52% to 48% to leave the EU, with a difference of about 1 million votes. Now, in Scotland, however, voters strongly backed continued membership of the bloc. 62% of the people voted to remain, with a majority in all 32 of its local authority areas. Wales and England voted to leave the EU, while voters in Northern Ireland voted to stay in. But in London and other major cities, voters chose to remain, revealing a deep divide in British society. Now, in the wake of yesterday's news, the pound fell to its lowest level against the dollar since 1985 as the markets reacted to the result. Well, of course, many of us in Africa will have been watching the news in the UK and wondering how it will affect the continent. And of course, following that Brexit outcome, the British pound took a tumble, and the most widely traded African currency, the South African rand, had already followed suit early on. Of course, it gained against the pound, losing more than 8% against the US dollar. But in areas of mining, Brexit could be positive for South Africa's gold mining sector, with the uncertainty making the gold price soar. When it comes to trade, the UK's trade deals with Africa are also the EU's trade deals with the continent, and it might take a number of years for those deals to be renegotiated. Of course, a fall in consumer demand in the UK could spell trouble for African exporters, for example, Kenyan flower farmers. Another area of concern is development aid, with the UK being one of the biggest supporters of EU aid programs on the continent, both politically and financially. On a positive note, though, analysts have noted that the UK is looking to strengthen ties with the Commonwealth, and this could even make immigration for Commonwealth citizens slightly easier. Well, let's bring you some analysis on how the Brexit might impact on Africa. I'm joined in studio by analyst and CEO of Rich Management, Ali Khan Sachu. Ali Khan, thanks very much for joining us. Well, let's begin, of course, with that latest news that's just come out now, the credit rating downgrade of the UK. Should African countries that work closely and have close ties with the UK be worried?
We had a perfect storm on Friday. I mean, the bow wave, what we saw before the vote compared to what we saw, the shock wave that we saw after, it was unprecedented. As you said, sterling fell to lows not seen since 1985, biggest one-day move in recorded history. The only other places which have had currency movements of this kind this year was the Rand, a flash crash earlier in the year, moved 10% in the early hours of the morning, and Maputo, where the currency fell 10% in a single day. So very unprecedented, very difficult to predict. The downgrade was inevitable. My concern with Africa is, you've got the UK, they've got to concentrate on the breakup of their marriage with the European Union, renegotiate all those treaties. Are we going to be on the table when they're doing all this work, or are we going to be on the back burner? Big trading relationships, you mentioned South Africa, of course, Kenya, old colonial power, strong in big investments here. When you drink a Kenyan beer, Diageo is 50% of that. When you make a call on Safaricom, Vodafone is 40% of that. And you look at all our fresh vegetables, you go to a supermarket in the United Kingdom, you look at our fresh flowers, and you're importing all this volatility into these trading relationships. It's got to be affected. The question is by how much.
But then what do African countries need to do then to mitigate against the possible dangers that might arise in this period of uncertainty?
So I think those African countries which have strong ties and strong relationships, South Africa, Kenya, have got to look at this very, very closely, got to make sure that they've got leverage at this important time so they can renegotiate their trade agreements, create buffers for their trading relationships with the United Kingdom. They've got to be picking up the phone. They've got to pick up the phone to all the new folks who are going to be coming in and saying, we need to be heard. We want to be at the table with you at the same time as you're dealing with the Europeans.
And is there any good news on the horizon? We saw gold doing particularly well, but
Yes.
might the Brexit create new opportunities for African economies?
So, you know, Ben Bernanke said many years ago, why do people hold gold? They hold gold because they want protection against the worst possible outcomes, what are called fat tails. This is a fat tail. So I think gold will continue to go higher, which is going to be supportive for South Africa. But, you know, against that, South Africa's got its own challenges around governance, around financial risk, which continues to be there. So, you know, it's difficult to find a real silver lining. The UK will bounce, but it's going to go through a period, a very hard period, and naturally that's going to create collateral damage in Africa.
So is there anything that is certain is uncertainty, as they
Yes.
say. Well, thanks very much, Ali Khan, for that analysis here live with us in our Nairobi studio.